Welcome to KTM Investing. Today I'm going to show you how to invest in Tesla, BYD, and NIO, along with a few others for less than their current market price. Electric vehicles and Chinese tech are reshaping the global investment landscape. But what if you could gain exposure to this revolution, to Tesla, NIO, BYD, XPeng, and others, without needing to buy individual stocks at high prices? That's where ETFs, or exchange-traded funds, come in. These are baskets of securities that let you diversify across sectors, affordably and efficiently. Today I'll break down some of the most promising China and EV-focused ETFs for 2025 and explain why they could power the next decade of portfolio growth. Let's start with some fundamentals. China has 1.4 billion people and 329 million vehicles on the road. The Chinese government has mandated that all vehicles must be electric by 2035. That means 323 million gas-powered cars need to be replaced in just 10 years. This gives the Chinese EV makers a notable advantage and is one of the main reasons why Tesla set up a factory in China. Gas-powered cars require a $12,000 permit in many provinces. They face driving restrictions for access to city centers and are often not allowed to be on the road during peak hours. Meanwhile, electric vehicles enjoy full access and no licensing fees. In China, EVs aren't just a preference, they're a policy-driven necessity. Despite this huge market, only approximately 6 million EVs have been produced so far in China. That leaves a massive opportunity for investors who are willing to take the risk. So, how do you invest in this shift? Here are the top ETFs that make it possible to own Tesla, NIO, BYD, and other tech giants with just a single trade. The first ETF is BATT, which is the listing name for Amplify Lithium and Battery ETF. It is priced at around $7.86 and has a PE ratio of around 29.22 as of the making of this video. Their holdings include Tesla, NIO, BYD, XPeng, and Li Auto. This ETF focuses on energy storage, the lifeblood of EV performance, and they are invested in a few of the most promising EV makers in the country. Next up we have KGRN, which is the listing name for CraneShares China Clean Tech ETF. Their current stock price is around $24.59, and they have a PE ratio of approximately 9.29. Their holdings include NIO, XPeng, BYD, and Li Auto. Next we have CARS, which is the listing name for CraneShares Electric Vehicles and Future Mobility ETF. It currently trades at about $20.27 as of the making of this video. Their holdings include Tesla, Rivian, XPeng, BYD, Li Auto, and Geely Auto. Next we have the Invesco China Technology ETF with ticker symbol CQQQ, and it is currently priced at approximately $41.14 as of the making of this video. This company is not necessarily an EV play, but they hold some of the biggest Chinese companies in their portfolio, so I wanted to include them as a great ETF to invest in. Their current holdings feature Tencent, Alibaba, and Meituan, three very successful Chinese companies. Next up we have MCHI, which is the listing name for iShares MSCI China ETF. It has a current price of around $50.56 and is also not an EV play, but a great way to get into companies like Tencent Holdings, Alibaba, Meituan, and Xiaomi. Next up we have KBA, which is the listing name for CraneShares Bosera MSCI China ETF. It is currently trading at around $22.74. Its holdings include companies like CATL, which is the biggest EV battery manufacturer in the world, and the company that supplies Tesla with LFP batteries. They also hold other large manufacturers like Quaichao Mutai and Zijin Mining in their portfolio. All of these ETFs are available to U.S. investors via Fidelity and Robinhood. That means it's easy to start small and diversify quickly. By choosing ETFs, you get fractional ownership in high-conviction companies without the risk of putting all your eggs in one basket. You're investing in the entire EV and tech transformation, in China and globally. By the way, the battery giant CATL doesn't just supply Tesla but also BMW, NIO, XPeng, Volvo, Toyota, Volkswagen, Li Auto, and more, and it is one of the top holdings for both the BATT and KBA ETFs. Geely Auto, one of China's most undervalued innovators, also appears in the CARS ETF. Investing through these ETFs lets you bet on megatrends, not just headlines. It's long-term, smart, and surprisingly affordable. Subscribe to KTM Investing 360 for more data-backed investing breakdowns and bi-weekly videos that help you turn global trends into real opportunities. Thanks for watching, and happy trading.